welcome back to Fit. I know it's been a while since I've been here and done a video here. I have been doing videos over on my other channel, and I've been busy at work here trucking, and also I have got back into the stock market, and I just really honestly haven't had time to focus on this channel. And I just wanted you to know, don't have very many subscribers here, but I am going to start working on this channel more because it's something that I'm very interested in. And I have a lot of information to put out here as well. So, welcome back to the channel, and thank you for coming, and thank you for subscribing, and thank you for liking the videos, and just thank you for being here. With that said, the subject I wanted to talk about is how to make money when the market as a whole, we're talking about stocks here, when the market as a whole is on a downtrend. Now, this applies to the market when it's going sideways, and it also applies to the market when it's in an upswing. And what I'm talking about is investing in individual stocks. Now, a lot of people will give a lot of different information out. They say the only way that you can get into the stock market, the only justifiable way to get into the stock market is to buy the market itself, like the S&P 500 or the NASDAQ or Dow Jones Industrial Average, ETFs, stuff like this, and you've got to just ride the market. Well, what happens when the market turns down? And you say, well, it never stays down. It will go down, and that's when you buy into it and it comes up. I want to discuss some stuff here that I learned back a long time ago when I was doing stocks before. I was a day trader. I had over $25,000 in my account. I was officially a day trader. I was making multiple buys, multiple sells, and one day, and I burnt myself out. One is because I didn't know how to read the market. Two is because I didn't know how to read stock charts. Three, I was getting information from unreliable sources, such as other investors, and I didn't understand if they were profitable investors or, amateur investors or people that was losing their shirt in the market. Another thing was, you need to tune in to all of these websites or television channels that promote buying and selling stocks. You need to listen to Kramer. Remember Kramer? You need to listen to him because he'll slam the button and say buy, 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 or sell, sell, sell. And folks, I'm just here to tell you the honest truth about buying and selling stocks. And you can take my advice or you cannot. I don't suggest that you take advice from any one source ever, no matter what you're talking about. Getting back to these individual stocks, though, there's a lot of controversy and a lot of talk going around about, well, you don't want to get individual stocks because they're too volatile, because they go down too easy and they fall too easy and you can't predict them. I have a rebuttal for that. If you know how to read a stock chart and you know what trend lines are and you know what the history of the stock is, and you look at the financials of the stock, they're the individual stocks are just as safe, if not more safe, than investing in the market, the S&P 500, or a blue chip stock, a high level company that is on the S&P 500 or the Nasdaq. I'm going to put up a couple of screenshots here to show you what I'm talking about. And all of these are done today on the same day. The first screenshot that I want to look at is, give me a minute here. I don't have it ready. I didn't have it pulled up, but I'll put the screenshot up here on the screen to show you what I'm looking at here. This is a screenshot of today, Tuesday, April 15th, tax day, on the S&P 500 ETF. Okay, that's what this is. The spider index, as they call it. SPY is the symbol if you want to look it up on your stock chart. And it goes along with the market as a whole. The spider index, the Nasdaq, Dow Jones Industrial Average, most all of the ETFs, not all of them, but most all of them, and a lot of the blue chip stocks, the higher level stocks, they all go on the same trend line. I mean, there's a little deviation between them at times, but most of them follow the same trend line. So my suggestion is just find the cheapest stock. If you want to go in it that way, find the cheapest stock and just throw your money into it and hope that it comes back up. I don't really suggest you doing that, though. I really don't. I suggest that you slow down and read a stock chart. Now, I'm going to put this one up here and go through it with you. In the top left-hand corner, you will see it's a spider index, the S&P 500 ETF on, excuse me, on the New York Stock Exchange. On the very top right-hand corner, you'll see is Tuesday, April 15th, and it went down 0.28%. And the change was a negative $1.51. Well, that's very minimal. But when you look straight down under that, on the top right-hand corner, you look down at the actual stock chart in the middle here, you can see that it has been, going up for a while. This is a 2-year stock chart, and it's been going up for a while. You see back at the very start of the trend line, it had a little problem there, but it recovered very quickly, and then it started growing. You had a couple of little drop downs, but look at the very end of the stock chart on the very right hand corner, or the right hand end line of the stock chart here. What you will see is it broke momentum. It went under the 100-day moving average. It went under the 200-day moving average. That's what the blue and the red lines is here that I put up, is 100 and 200-day moving average. When it breaks down and falls down under that, what you will see is resistance kicking in. And resistance is pulling this stock down. Now, when you look directly under that, you will see the volume line at the very bottom. That's the lines that are pointing up, in case you don't know. At the very end here, the last little bit here in April, you will see a lot of sales. You will see a lot of spikes in buys, and then it drops down a little bit. Directly under that is your MACD level, and you will see that it is broke down under the resistance line as well. So what does all of this equal out to? The signs of a bear market, especially if that blue line crosses the red line and goes under the red line. If this stock candlestick stays under these moving averages very much more, you will see the blue and the red line cross, which will show a signal that we have moved into a bear market. They call it a bear market because bears go into hibernation. The opposite is the bull market, and bulls charge ahead, you know. So that's where they get the bulls and the bears in the market. And whenever that 100-day crosses the 200-day, we will officially go into a bear market. Now, how long will it stay down? I don't know. I don't know. I mean, it could stay down a week, a month. Crap, I mean, not to be giving the bearer of bad news, but it could be down for a year. And I really doubt it. I'm not trying to throw any scare tactics out here at anyone, but potentially it could stay down for a year or more. You know, we could go back into the Great Recession. But I just, I don't see it. I don't see it. I think this is a temporary thing. With that being said, let's look at the next screenshot here. And this is a stock that I have pulled out. I have my list of stocks, and I have several pages in my little notebook here. I have several pages of stocks that I have written out from doing research, you know, different markets, different sections. I have some that are in trucking, some that are in retail, some that are in mining. Mining is a hot thing right now. Mining is a hot stock right now. And it makes sense because we're starting to go back into this bring it back to the United States mentality. Build in the United States. Made in America again. And that's where all of Trump's tariffs and everything are kicking in, because he's wanting to push all these countries away and bring everything back into the United States again. The only way that he can do that to control it, really, is to impose tariffs to where the United States built products are tariff free. So investors, entrepreneurs, developers, all of these people are looking at it and saying, well, all we have to do is shut our factories down in other countries and bring them back to the United States, and, tariffs is going to end. Well, most investors, and business people and all, they don't make quick, rash decisions. They make long-term, decisions that is going to affect a long-term gain in their investment. Now, what I was going to put up here was this stock chart, and it's called the Northern Dynasty Minerals Limited. It's on the Amex, and it is one of the stocks that I have been looking at. Currently, I do not own this stock, but I've been looking at it. Now, look at look at the entire stock. For the whole 2-year period, it's been going up. Now, does it follow the S&P 500 ETF that I just showed you? No, it doesn't. Because look at the very right hand corner of the stock. What you're actually seeing is a widening of the 100 and 200 day moving average instead of a crossing of the 100 and 200 day moving average. What does that say? That says that this stock is extremely strong. And it also says that if you invest in this stock for a long period of time, it's probably going to get wider and wider on your 100 and 200 day moving average until the point where it gets so wide and so overbought that it's going to fall down. Now, how do you offset in your mind, well, how volatile is this stock? If I wanted to invest $10,000 into this stock, do I need to be extremely cautious? Well, you need to be extremely cautious if you're putting $10,000 into anything, depending on what your total net worth is. Now, if your net worth is, Elon Musk's $10,000, is dinner money. But for average people, $10,000 is probably quite a bit of cash to be putting into something. So, how volatile or how iffy do I see this stock? Well, what I see is, when I look at it, what I see is a stock that is gaining momentum. One, because the blue line, the red line here, your moving averages are actually starting to expand, which is a good sign. Short term, I'll get to this in a minute. Short term, it's a good sign. You look at the top squiggly line here, that is your RSI. It's in the middle. It's not oversold. It's not looking like it's, way up there, oversold. You go down to your volume line. You see the volume is actually increasing, which is a good sign. You look down at the very bottom, your MACD is above the resistance line. So, strong showing of the stock. This is on the same day that I took this screenshot of the S&P 500. The S&P 500 lost money. This stock went up 11.34% on the same day. See how individual stocks are totally different than the market, than ETFs. They don't follow the same trend line. I had an investor tell me that the other day. I was talking to him on his YouTube channel in the comments. Oh no, you never, never, never put your money into individual stocks. Never, never, never put your money into individual stocks. It's too volatile. You will lose your butt. Never say never, folks. I was a day trader for years. Back in 07, 08, 9, 10. And I made a lot of mistakes. I made a lot of profits. I made a lot of mistakes again. I made a lot of profits again. And I started educating myself. Over the years, I have read, I have studied, I have contemplated the market, different stocks, different scenarios. This proves my hypothesis. You can make money on a downturn economy with individual stocks if you know what you're doing, you know how to do the research, you know how to read the stock chart, you're confident in your buys. You can make money. Now, what I will say is negative. Well, let's go back and look at the same stock chart. What's negative is Your blue and your red line, your moving average. They're too far apart. They're starting to get too far apart. Your candlesticks are way above your 100-day moving average. Starting to spread out too far. It's getting too far out. Will the stock be able to make some more money? Probably. Probably. You will look at another probably week to a month of gains in this stock before it gets too far out and it falls. Now, what you will want to watch for, if you were to buy this stock and you were to put money into it, you would want to set, in my opinion, you would want to set a limit of a 7 to 10% stop loss. That way, if it fell below your initial buy, if it fell below a 7 or 10% loss, then it will automatically sell. Now, back when I was doing stocks before, they would charge commissions for buys and commissions for sales. Nowadays, in today's market, there's no commissions. The only thing that you're going to lose is 7 to 10% of your initial money that you put in. I want to be very careful how I say this. I personally don't like putting that 7 to 10% stop loss in myself. I don't like setting a safety net for myself because I like looking at the stock every day. When I put money into it, I watch my stock like a hawk. I will go over that stock 2 or 3 or 4, maybe 6 times a day and look at it and think about it. I'll look at it in the morning before the market opens. I'll look at it in the afternoon when the market closes, and I will look at it during the day while it's trading. If I'm still confident in my opinion of a hold, I will hold it. Okay? And I made a mistake just the other day. I'll be honest with you. I bought a stock, and I thought the stock was actually going to plummet. It was showing signs that it was failing. And I sold it. And I sold it for exactly the money that I put into it. There was no profit. There was no loss. It was zero. The very next day, it went up 23%. I'm not joking. The very next day, it went up 23%. It was showing a sign that it was falling, and it went up. And it's went up a couple of other times since then. The good thing about that stock there is it will fall back down because it's just making these slight moves up and down on the chart. But because it's such a volatile overall stock, I can turn around and buy that stock again a week from now, 2 weeks from now, and I can still make a profit off of it. I'm still watching the stock. I'm still looking at it, and I may buy it again. I don't know. We'll wait and see. But I may buy the stock again. One of the stocks that I bought recently, yesterday, went up 53% in one day. It went up again, I think 20 something, 21, 22% today. And it's showing signs that it will come up again tomorrow. Now, I may sell the stock tomorrow. I may take my gains out and I may sell the stock because it's going to peak out and then it's going to fall down and then it's going to come back and peak up again. I may just take that stock is so volatile. that it even scares me because I don't really know for sure what that's going to do once it peaks up, because it could come crashing down hard before it comes back up again. It is an extremely volatile stock. I mean, like, your moving average is here, the stock price is way off of the chart up here, and then it goes way under the stock chart down here and back up. I mean, it's doing this soaring in just a matter of days. I mean, it's not even a week, it's a matter of days that it is shooting up and down off of this moving average. And people are making some crazy money off of this stock. I mean, I'm talking literally within 2 to 3 days, it's moving 75%. I don't recommend that you buy a stock like that. I I'm more experienced than what I would say a lot of amateur investors are. It doesn't scare me, but someone that doesn't know exactly what they're doing with that stock, man, you could buy that stock and the next day you're looking at a 75% loss. But then a couple of days later, it could go back up 60%. I mean, it's just all over the place. Now, that's a little too volatile. That's a little too volatile there. But I'm just wanting to make my point. When the market is down across the board, the NASDAQ, New York Stock Exchange, the Dow Jones Industrial Average, the Spider, ETFs usually follow the market. The blue chip stocks usually follow the market. When you're looking at making a profit and the market is down, look to individual stocks. But be sure of what you're buying. Know how to read a stock chart. You've got to know how to read your stock chart. You've got to be confident in what you're getting yourself into. Hopefully this helped. Hopefully this cleared a little bit. It's what I do. I was just throwing good money after bad when I first got into stocks. I didn't know how to read a stock chart. Didn't know what to buy. Didn't know what a buy signal was. Didn't know what a moving average was. I didn't know what a RSI, a MACD, Bollinger Bands. I didn't know what any of this stuff meant. I have had to self-teach myself all of this stuff and figure out what a trend line was, what a buy signal, what a sell signal is. I had to self-teach myself how to read stock charts. It's something that you should do as well. I will be putting more videos up here. I will be putting more information up here. I will be trying to do as much as I can to grow this channel. I need your help. I need you to click the subscribe button. I need you to click the like button. Share this. Put some comments in. Let's grow this channel. Let's grow this community. And let's grow our investments. Thanks for watching.